to Morning Trade Live. It's Friday. Time to go inside out on big tech earnings. Joining me right now, Rebecca Walser, President, Walser Wealth Management. So glad you are here.
Glad to be here.
We're talking a lot of the tech names today. I just saw that the Dow, up 9 days in a row, has not had a winning streak like this since the summer of 2023. The NASDAQ clocked in a gain in April that no one expected.
Yeah.
How are you feeling about the market? And you rightfully called a huge sell-off.
Yep.
Where do you stand now?
Well, I mean, I'm super happy to be here on a Friday with the opening bell, Nicole, and have everything like positive and going to the upside. Obviously, you know, Meta and Microsoft earlier week really turned the markets positive. Oh, this isn't really impacting. If you look at the Mag 7, the expectation is still a 15% increase in revenue and profit margins, even with the tariffs. So I think that the market is definitely expecting some kind of, okay, let's have some positive news. But when we look at Apple and we look at, you know, Amazon, you can see that even though we had double beats on both, you know, some were small, and we also see that we have weakness in AWS, and we have some guidance problems for Q2, and that's really the bigger issue: is where are the Trump policy, are the Trump tariffs going to come down on guidance for the future for Mag 7? And I don't think that we can expect Mag 7 to pull the whole weight this year, which is why it's really great to see that consumer staples and utilities have done like over 3% year to date.
I really enjoyed, we had a long-form conversation that went on to market overtime. I enjoyed that because you really got to explain more, and I mean, as a pro for decades, that really shined through, and why you had the premise of the sell-off in the first place, of oil coming down, stocks coming down.
Yeah.
At that time, even from last year, you were calling for a 30% sell-off. I mean, what do you tell folks, and I do want to get to these names, but what do you tell folks today who say, is the market going to be higher at the end of the year? What do you tell them now?
You know, I still see that we are having a global rotation, and it is still macroeconomically a very difficult environment. If you look at crude 59, I mean, this is problematic, and it's indicative, Nicole, of global slowdown. So unless and until we can get some kind of direct deal with China that the world can say, okay, it's resolved, you're still going to see consternation back and forth, oscillation back and forth. And I do think to the net number, if Trump is successful on implementing fully his real intentions and policies, it is going to be a little bit of a problem for equities, for sure.
Okay, but you're not on the 30% sell-off.
I mean, I think we've come down,
right?
And I'm really hopeful that think of it this way. It's like when you start working out and you tear the muscle down to build it back up. So we are going to have some down tears for the rebuilding of supply chains. Look at Apple and basically saying, we'll source iPhones.
Let's talk about Apple.
Okay.
I mean, let's get to Apple, because we got the numbers yesterday here. You know, some of it was slightly better. We did hear from Tim Cook saying a warning of about a $900 million tariff cost charge for the quarter. At first, they said they were uncertain. It looks like the iPhones mostly will be produced in India. But, you know, it's down 4.7% today. Some of your thoughts?
I mean, I think with Apple, you know, Cook had mentioned that he didn't see any pull through. But I tell people that are going to the Apple stores and trying to buy their phones, the lines are out the door. So the fact that he said he didn't see pull through and like pre-buying before tariff policy goes into effect was a little bit surprising to me, because I think everyone has kind of sensed that is happening. And if you also look at Apple, it's kind of amazing that this quickly they're able to say we can get Q2 June through you know, India. We can source it all through India. Can they sustain that though, Nicole? Is that something that they have all the supply chains ready to go to continuously do that for Q3 and Q4, or Q3, Q4? And I'm not sure that they do. And so it's good that they can say it for this coming quarter, but future guidance beyond that, I think, is an issue for them.
Do you buy this name here at 203? The low, not that long ago, was 169. Do you buy this for a long-term play, or when do you think you might step in a name like this?
I mean, consensus is that it would be like 32%. It's like it's a buy on consensus, just pure consensus of where it's trading right now versus where they say it should be trading. So that they would say that it's a buy. But again, for me, I would say that we are going to have a lot of gyrations these next 8 weeks. 8 weeks is probably very key here for us to see the negotiation, to see the other country tariff deals, and actually have policy implemented. So for me right now, I think that volatility is going to be a factor for 8 weeks. And if you can't handle that, if you're looking for short-term price action to the positive, you need to understand that 8 weeks are going to be volatility.
Okay, and then what about Amazon?
I mean, with Amazon, we have that back and forth on are they going to disclose the actual cost to the consumer, which is actually quite interesting.
It looks like they've laid off of that idea, right?
I think that it's they're a unique business model, right? Because they're, with the exception of some things, they're not creating things. They're basically a marketplace for other existing sellers. So it's going to be really hard for them this early on to pinpoint what the actual tariff cost is being passed to the consumer. So I think that was probably smart to pull that idea back. Maybe it can come back after the policies are a little bit more solidified, but right now it's too much speculation. And I think the bigger thing with Amazon, if you look at the port of Los Angeles, for example, Nicole, we're expecting 30% less deliveries from China in the month of May, just in LA's port alone. If you look at broader terms for the entire U.S., it could be as upwards as 60%. So when that is a direct impact to both Apple and Amazon, we know it's true, and we just can't disguise that and sit here and pretend like it's not going to happen.
I mean, Andy Jassy's saying that they are maniacally focused on trying to keep prices low. The president said, look, things might go up a bit. I mean, he said, like, instead of, what was it, so many dolls, instead of 30 dolls. Yeah, I don't know what he said. I don't know, just you won't have so many dolls and your doll might cost more. You know, he was just trying to paint the picture that sometimes we have an abundance of cheap goods.
Yeah.
And why.
Exactly.
And Andy Jassy noted that there will be a pandemic-like shift for the consumer, but that they are really focused on keeping the price low. Does this mean this could be a buy for the long term? It's at 186. Buy or not yet? Same story.
It's under consensus. There's definitely upside given consensus. However, to your point about the supply chains, they've also said that there could be COVID-like shortages. Walmart and Target are saying there could be COVID-like shortages on the supply chain side. You could go to the shelves and see nothing. So it is going to impact the fact, and I just want to make a point about Trump. He's really just telling the American people, look, you guys, basically we create our own laws to make manufacturing so expensive here, liability, all these things, tort action, all these things. So we shifted to Asia as the manufacturing base, cheaper labor, and now we're saying we're really getting not fair trade deals in that process with all of the tariffs that everyone else puts on us. So let's balance that back. If you're going to bring manufacturing back to the United States, it is more expensive. We are more litigious. We have more protections. We don't have slave wage labor in this country. So he is letting the American public know you can't have it both ways. You can't have all of your cheap goods from Asia and then yet expect to have good paying jobs in America. There's going to be some cost.
Gold was something you talked a lot about. Give us your latest update on where you think gold could be headed.
So gold is definitely going to be one of those things that gyrates to the downside, especially in the event of global liquidity constriction, because gold is always something that investors turn to, and even institutionals, to raise cash and go back into the market. So you'll see rotations in and out of gold as the market gyrates up and down. It has done over 40% year over year, just April to April. So what we're looking at is a really good play to safety, and absolutely as things become more volatile, especially if you get any kind of geopolitical escalation of any kind in the Middle East or Russia, Ukraine, then you're definitely going to see a back retreat to safety again.
Right, so it sells off when people want to free up some cash to buy some stocks, and when they get nervous,
or margin calls, when margin calls come in.
Oh yeah, that was another, definitely another thing. But you could see new highs. It went to 3,400 recently.
There are some 4,000 calls for gold. I look at like Bank of America's Harton, and he's still saying I'm still focused on international equities and not the U.S. equities. So I think that there's going to be back and forth, and I'm really looking at the next 8 weeks, Nicole, as very foundationally important for the rest of the year.
Nice to see you, Rebecca Walser. Thank you of Walser Wealth Management.
Thank you,
Thanks
Nicole.
for being here today.